The government says private sector companies and industries under the International Trade and Industry Ministry in states under the CMCO may operate at full capacity effective this Thursday, lifting the state's work-from-home directive that limits the presence of management and supervisory staff at the workplace to 30%. This comes even as Putrajaya extends the CMCO in Kuala Lumpur, Selangor, Johor, Penang and Kelantan to April 14th and similar restrictions in Sarawak to April 12th. The rest of the country remains under RMCO until April 14th. The current restriction on interstate travel remains. Senior Minister Security Cluster Datuk Sri Ismail Sabri Yaakob announced today that the decision to lift the work-from-home policy was because it was difficult to implement. Manufacturers, for instance, argue that their operations are complex and technical in nature and often require several teams, including managerial and supervisory staff, to work together. He said the decision was made after listening to a presentation on risk assessment by the Health Ministry. Meanwhile, the capacity for the public sector will be decided by the Public Service Department. FTSE Russell is removing Malaysia from its watch list for exclusion and retaining the country in its flagship World Government Bond Index. The benchmark provider announced that Malaysia will no longer be on the watch list for potential downgrade of its market accessibility level to 1 from 2, with 2 representing the highest level of accessibility for foreign investors. In its announcement, FTSE Russell commended Bank Negara on the initiatives introduced over the last 2 years by the central bank to address the concerns of foreign investors when accessing the Malaysian government bond market. These market improvements include boosting secondary market bond liquidity through significantly more reopenings this year of Malaysian government securities issuances and enhancing the foreign exchange market structure and liquidity through increased price transparency after local trading hours via the now permanent Appointed Overseas Office program. Malaysia was placed on the watch list in March 2019. According to UOB Global Economics and Market Research, since then, cumulative foreign flows into Malaysia's government bonds have totaled 41.6 billion ringgit, with foreign holdings rising to 24.7% in February 2021 from 21.9% in April 2019. This, UOB said, suggests that Malaysia's government bonds remain attractive and supported by stable macro fundamentals. Sapura Energy's unit, Sapura TMC, has executed multi-currency financing facilities to raise over 10.3 billion ringgit. In a filing today, Sapura Energy said the facilities comprise 2 term loan facilities of about $602 million or 2.5 billion ringgit and 906 million ringgit respectively, and unrated sukuk murabahah amounting to $125 million or 518.5 million ringgit and 6.38 billion ringgit. The facilities have a tenure of 7 years and are guaranteed by Sapura Energy. It comes with the condition that its largest shareholder, PNB, continues to have over 33% in the group. The refinancing exercise has been long awaited by the company, which has been swinging between profit and huge losses since 2016. As at end October 2020, the group had borrowings of 10.45 billion ringgit, comprising short-term loans of 3.29 billion ringgit and long-term loans of 7.16 billion ringgit. The proceeds from the new facilities will be utilised towards full settlement of all amounts payable and outstanding by Sapura TMC under a 2014 conventional facility, a 2015 Islamic facility, a 2017 conventional facility and the existing outstanding sukuk murabahah under the multi-currency sukuk program. Sime Darby is considering several options for the proceeds from the sale of its remaining 10.89% stake in Eastern and Oriental, including a special dividend to its shareholders. The group disclosed further information on the exercise following an email query from Bursa Malaysia yesterday. It said all options remain open at this stage on the use of the 93.5 million ringgit proceeds, which may be utilised for capital expenditure, loan repayment, working capital or special dividend. The board also requested further justification on the disposal consideration, to which Sime Darby said the offer price of 60 cents per share was at a premium of 29% to its last closing price of 46.5 cents on March 12th. It added that the disposal will result in a reversal of impairment of about 21 million ringgit based on the group's carrying value of E&O as at December 31st, 2020. FlexiDynamics Holdings saw its share price soar by as much as 52 cents or 260% in morning trade, jumping to 72 cents against its issue price of 20 cents. The glove chlorination specialist, which made its ACE market debut today, opened at 69 cents a piece. It closed at 43 cents for a market value of 122 million ringgit. FlexiDynamics Managing Director Tan Kong Leong said during a virtual media briefing today that the listing marks a new phase for the company and will strengthen its profile as one of the leading players in the glove manufacturing industry. Tan said FlexiDynamics has seen rubber glove manufacturing activity growing significantly across the world during the COVID-19 pandemic and believes the company can leverage this increase in activity, which will benefit the group in the long run. According to Tan, FlexiDynamics first started operating out of a rented factory located in Banting, carrying out design, engineering, installation and commissioning of online glove chlorination systems. Today, it provides both online and offline glove chlorination systems to clients in Malaysia, Vietnam, Thailand, Indonesia and Sri Lanka. Among its glove manufacturing customers are Harta Lega Holdings, Kosan Rubber Industries, the Sri Trang Group and Ever Global Vietnam Enterprise Corp.